Hey there, good morning, and welcome to the Mortgage Rate Forecast with Scott Criss. It's August 4th, and let's get going to the charts. As you can see, bonds are trading up pretty well today. We're currently at $103.94 this morning. Our support's coming in below us at about a 103.60. Next line of support is going to be down here at about 103.40. So you can kind of see the patterns here, but a little bit of a roller coaster over this last week. Our resistance, we're having a hard time going through and really breaking that 104. And so I'm going to call 104 our resistance for right now. And as you can see, we're kissing that resistance. We're trying to get above it, but we're just we're kind of struggling getting above this 104 threshold. As far as reports go, jobless claims came out. They're up about 3,000, and the challenger job cuts are up as well. Both of those very bond friendly. Big reason why we saw the spike. Factory orders came out. They were right at expectations, but still, factory orders it's showing some weakness in the economy with where the expectations are. So again, even though they came in a little bit better for the factory orders, I'm not gonna really say this is good or bad. I'm just gonna say, hey, it was just relatively neutral. As far as the news goes, and I'll tell you what bonds really did like this. Bank of England came out and they lowered their discount by 0.5%. So that's very similar to when our Fed comes out and says, hey, we're going to lower our discount rate, 0.5%. Very similar. So obviously, the Bank of England is working hard to try to stimulate the economy, which is the reason why they lowered that rate. So very bond-friendly news on that as well. I guess I should have put that in green for you guys, but pretty good. Freddie Mac did come out with the reports from July already. So on average, I would say the bonds in July traded about 103.80. Currently, bonds are trading about 103.84. Freddie Mac came out and said the average consumer received at a 0.5 point, an average rate of about 3.44 in July. Really awesome, guys. That's some good pricing. So anyway, what could a consumer expect today? I would say if the average trading was about 103.80 last month and we're trading at 103.94, about 14 cents better. So instead of paying 0.5 point, this consumer could expect a similar rate for maybe a little bit less. So at any rate, all in all, pretty darn good time. Pretty darn good time to buy or refinance. Let's move on. Analyst outlook. What's the forecast? Both analysts are pretty neutral. One analyst is actually thinking about going short on the long term, but he's holding neutral. So we have pretty consistency, a pretty good consistency here of neutral on short and long term. So analysts don't think we're going to see a whole lot of movement. As you can tell by the charts, we have a pretty flat trading channel, even though there is some really high highs and low lows, but all in all, pretty flat what we're expecting. So from my report last Thursday, bonds actually did hit my expectations of trading between 103.4 to 104. I'm going to keep those expectations. Maybe I'll bump it up verbally here for you. I think we'll actually probably trade between 103.6 and 104 through this coming Tuesday. So what to do if you're locking? If you're a consumer, you're thinking about locking your loan. Since we are on the higher end of the trading channel, if you're closing your loan soon, nobody has a crystal ball. I always say that, but if it was me and I was closing my loan in the next week or two, I'd probably lock in just to be safe. With all the reports coming out in the economy, if you do have like some time to kind of gamble it, you may, if you got to stay tough, but you may actually consider floating and kind of seeing what happens because, the overall push could, in the long term, I'm kind of thinking we could see some improvement. So we'll see. And hey, that's it for today. We'll see you next Tuesday. If it's your first time on the channel, subscribe's at the top left. If none of this made sense, it's okay. Bonds 101 at the top right, that will give you a link to kind of give you some basics of how the mortgage-backed securities trading impacts you as a consumer. Anyway, we'd love to hear back from you guys. Leave your comments down below, questions, ideas, predictions, and everything likes to be liked. So does this video. Hit that like button before you go. Anyway, take care, guys. We'll see you next Tuesday. Bye-bye.